So, the question every Dogecoin holder is asking right now, is it smarter to hold Doge long-term and wait for that potential explosion, or to trade short-term and take advantage of those wild price swings? In this video, we're diving deep into the reality behind Dogecoin's investment strategy, long-term versus short-term, and what data, market psychology, and recent on-chain developments reveal about where the real profits could come from. Because whether you've been holding since the Elon tweets or you're just getting started, this breakdown will change the way you look at Dogecoin forever. Dogecoin started as a meme, but over the years, it's become something much bigger. It's no longer just an internet joke, it's a living, breathing part of the crypto ecosystem, backed by a massive community, consistent development updates, and support from one of the world's most influential tech figures, Elon Musk. But how do you approach it as an investment? That's where things get interesting. Most traders fall into two categories: those who believe in Dogecoin's long-term future as a decentralized payment currency, and those who treat it as a short-term profit opportunity based on hype, news cycles, and market volatility. Both strategies have worked for some and failed for others. But understanding the difference between these approaches could be the key to not just surviving in this market, but thriving in it. Let's start with short-term investing. Dogecoin is known for its extreme volatility. The coin can move 20%, 50%, or even 100% within days, something most traditional assets could never match. That volatility makes Doge a trader's dream. If you know how to read charts, follow news sentiment, and understand the timing of market cycles, you can ride these short-term waves for solid gains. For example, every time Elon Musk mentions Dogecoin, whether it's about Tesla payments or just a tweet, there's a visible spike in trading volume. Savvy short-term traders anticipate these moments and capitalize on them. However, short-term investing also comes with massive risks. If you buy in too late or panic sell during a dip, you can lose just as quickly as you gain. It's a strategy that demands discipline, technical analysis, and constant attention to market movements. You need to know when to enter and when to exit, something that sounds simple but is incredibly hard to execute emotionally. Now, let's move to the long-term perspective. Long-term Dogecoin holders, often called hodlers, believe in the steady evolution of Dogecoin as a legitimate cryptocurrency with future use cases. This strategy focuses less on daily fluctuations and more on gradual adoption, technological upgrades, and macroeconomic shifts in the crypto landscape. Dogecoin has seen several major upgrades over the years. The introduction of Doge OS, which allows developers to build decentralized applications directly on the network, is one of the biggest milestones. Then came Cardinal's index node, an innovation that speeds up on-chain indexing and could unlock smart contract-like capabilities. Combine that with Dogecoin's recent integration into payment systems like BitPay, and you begin to see how Doge could evolve beyond a meme coin into something with real-world functionality. Long-term investors also pay attention to macro trends like the growing mainstream acceptance of crypto ETFs, increasing institutional interest, and regulatory clarity in major markets. Analysts such as Dima Potts and Alex Becker have both mentioned that Dogecoin's long-term potential lies not just in speculation, but in its ability to adapt to new technology and utility standards in the coming decade. And that's what separates a meme coin from a movement. But here's where the debate intensifies: time horizon and opportunity cost. While short-term traders might make several profitable trades a month, long-term holders are betting that one major bull cycle could outpace all of that combined. If you'd bought Doge in 2020 and held through 2021, your returns would have been astronomical. On the flip side, traders who sold too early missed out on life-changing gains. The timing difference is everything. Short-term investing thrives in volatility. Long-term investing thrives in conviction. The question is, which one suits your mindset and risk tolerance? Let's break down what influences each side. For short-term investors, the biggest driver is liquidity and sentiment. Dogecoin's price often reacts to market hype, especially around Elon Musk, AI integration, or new crypto trends like PayFi and memecoin ETFs. Watching trading volumes, funding rates, and social media sentiment is crucial. News about new listings, like Doge ETFs being tracked by 21 shares or new treasury initiatives from Elon Musk's inner circle, can cause immediate surges. If you're a short-term investor, staying updated is your edge. For long-term holders, patience and network development matter more. Dogecoin's core developers continue to make the network faster, cheaper, and more scalable. The integration of zero-knowledge proofs, ZKPs, and TE security systems show that Dogecoin is not static. It's evolving. These updates may not cause immediate price jumps, but they lay the foundation for future value growth. Long-term investors also benefit from compounding awareness. As more people learn about Doge's upgrades, its perceived legitimacy grows. Financially, both strategies differ in stress levels. Short-term trading can be emotionally draining. Constant chart watching, stop losses, and fear of missing out can easily burn you out. Long-term investing, on the other hand, requires emotional detachment and strong belief in the project's fundamentals, even when the price is down 80%. Each approach has its psychological challenges, and understanding your personality type plays a big role in success. Let's also talk about the math of returns. Traders often look for smaller, consistent profits, 10%, 20%, 30% moves, and compound them. Long-term holders look for exponential returns, the 10x or 50x move that changes portfolios. But here's the twist: in the crypto market, both can exist in the same cycle. Traders might profit from short-term swings leading up to the bigger macro rally that benefits the long-term holders. Smart investors know how to blend both. Some analysts like Ali Martinez and Michael Van de Poppy emphasize the importance of multi-cycle investing, holding a core position long-term while actively trading smaller allocations short-term. This hybrid approach helps balance risk and reward. You stay in the game long enough to capture big moves while taking advantage of short-term volatility for liquidity. Now, one of the key reasons Dogecoin continues to attract both long-term believers and short-term traders is community power. Dogecoin's online presence remains one of the strongest in the crypto space. The Doge army doesn't just hype the coin, it creates real projects, funds charities, and promotes adoption. The strength of this community translates into resilience during bear markets. When others give up, Doge holders meme through the pain. And that unity matters more than people realize. As for 2026 and beyond, experts predict that Dogecoin could play a major role in the next wave of crypto adoption. If the Dogecoin Treasury initiative led by Alex Spiro successfully launches, institutional capital could begin flowing in, marking the first time a meme coin gains structured investment vehicles on Wall Street. Combine that with upcoming ETF interest and the possibility of being integrated into X, Twitter, for payments, and Dogecoin's future suddenly looks more practical than speculative. So, where does that leave you? If you're someone who thrives on adrenaline, short-term Doge trading might be your playground. Watch trends, follow the charts, and stay sharp. But if you're someone who sees crypto as the next financial revolution and believes in the power of time, long-term investing in Dogecoin could be your golden ticket. There's no single right answer. The best strategy often lies in balance, keeping a long-term core position while tactically trading around it. That way, you're never completely out of the game, and you're always ready when the next Dogecoin rally starts. Because one thing's certain, Dogecoin is unpredictable, but it's far from over. With continued innovation, growing adoption, and the community's relentless energy, Dogecoin's next chapter could rewrite the rules of both meme coins and mainstream finance. Before you go, tell me in the comments, are you a long-term Doge holder or a short-term trader? Let's see where the real believers are. And if you found this breakdown useful, hit that like button, subscribe for more deep crypto insights, and ring the bell so you never miss the next big Dogecoin update. Because the next bull run might not wait, and neither should you.